In this video, I wanted to cover CareTrust REIT, which is a real estate investment trust focused on providing short-term or long-term housing for the elderly that combines healthcare services. People that need to stay somewhere or live somewhere for a long period of time that need medical care. This is a category that's growing really well, and CareTrust has been doing really well over the last couple of years. In the United States, we have an aging population. We have baby boomers who have reached high ages and really need this type of housing, temporarily or long term. So, CareTrust is really working within a really good part of real estate, providing something that is in high demand, providing quality uh, properties that operators can then operate and provide really good housing for the elderly. Real estate investment trusts are a good income stock. They provide good dividends. In the case of this one, it certainly does, providing a 4% dividend to investors. Over time, this stock has appreciated. I've owned it for a while and I've done well, but I wouldn't invest in real estate investment trust. If you're looking for high appreciation, you may look at more growth stocks for that. Let's take a look at CareTrust fundamentals. Look at their earnings that they announced on August 2nd and update my valuation for the company. I'll share the results of the valuation with you. I'll also let you know what I'm planning to do with this stock. Am I going to buy more shares, just hold my shares, or sell my shares in CareTrust? Let's take a look at the fundamentals. The market cap for CareTrust is 4.29 billion. The company has done well. If you look at the 1-year chart, the stock's up 35% over the last 5 years. It's only up 19%. And it's provided good points in time when you could buy this stock at a really nice discount. I took advantage of that, or at least I tried to. The revenue for the company is $245 million. It's really good, consistent revenue that's been growing. The dividend on this stock is 4.17, really good. The PE is a little high at 47.96. It's expected to come down next year. Analysts really like this stock. It's a buy rating, but it is priced at a premium currently, according to analysts. Looking at the financials, the company has been growing revenue nicely. This is a real estate investment trust, and it's good to see that the revenues are growing really, really well. I don't look at cash flow for REITs because they tend to have a lot of cash flow, and it's not the right way of valuing a company. The balance sheet as well, they have to carry a high amount of debt. I just want to make sure that it's a sound balance sheet, that the debt that they have is collateralized by good properties, which is the case here. And I believe the balance sheet and the cash flow statement look okay with this real estate investment trust. Analysts cover this stock, 8 of them cover it. And in general, they have a lower price target than where the stock's currently trading. Real estate companies had a really good 30 days. If you noticed, interest rates fell and real estate stocks really rallied. That might be part of why it's being sold at a premium currently. Analysts believe it's being sold at a 10% premium if you compare it to their price targets. Their analysis is primarily based on earnings per share. The earnings per share is expected to be $1.04, and that grew substantially from last year, doubled. And it's going to grow at around 12% in 25 and then be fairly flat on 26. I'll use the earnings per share as part of my value evaluation, and also look at their dividend and see if I can get a value for the stock based on their dividend. So what do I think CareTrust is worth? Let me value the company, and I'm going to use their dividend rate as well as earnings per share to arrive at that conclusion. The dividend has been really steady, and they can afford to pay out the 36 cents per quarter dividend. They pay out 81% of funds from operations, and the dividend rate annually is $1.16. The value per share, if I use the dividend rate, is $29 per share, but the stock price is trading at $27.83. So it offers a very small discount if I value the company using their dividend payout ratio. Now, if I look at earnings per share and use their expected earnings per share this year and a PE of 24, I get a value per share of $25.96, which is lower than their current stock price by 7%. That said, when I average the two, I get a 1% premium that is being paid on this stock currently. How desirable do I think CareTrust is as a business? Well, I'd like to go through that and rank them in my desirability quadrants. I love companies in the green. These are companies with no competition. They have great barriers to keep competitors out, and they make lots of money, lots of free cash. In the gray, they do have competition, but it's a good industry. They could make good profits. The red, I try to stay away from, which is industries where there's just too much competition. prices are going down, revenues are going down, profits are going down, and cash flows are very, very hard to find. So, where does CareTrust rank? Well, I do like that they really specialize in providing the housing, the properties for the elderly that need healthcare while they stay there. I think it's a growing category, it's an expanding market. So, that's really smart. They specialize in that particular type of property. So, I think that expertise is going to help them in the future. They are also a very well recognized company that is operating. So, operators, other businesses that want to partner with them, they really want to partner with CareTrust because they really know what they're doing. Having said that, they're not completely in the green. I'm going to say they're more in the gray than they are in the green, but they do have some barriers of entry, which is that they have that specialization within the space that attracts partners to do business with them. They have a very good model going. I don't see this model changing in the next 10 years. I think they're going to continue to do well. Therefore, most of the companies in the gray, a little bit is in the green. It is a desirable real estate investment trust for me. So I really like CareTrust REIT as a company. I like their focus. I like their balance sheet, but there's no discount. So I'll carefully continue to hold my shares and wait to see if the stock drops and provides a discount. I'd probably be a buyer. But for now, I'm just going to hold my shares of CareTrust. Thank you for watching the video. I really appreciate it. Just a quick reminder that I'm just an investor. I'm not providing any financial advice. I don't recommend you buy, hold, or sell CareTrust. This is just a video sharing my analysis and what I'm doing with this stock. I hope you found it interesting. Thanks again for watching. Good luck investing.